What's up, guys? I'm here in the New York PM session and I'm about to take a trade off of the 15-minute chart, and I wanted to give a good example of a trade setup that I typically look for and find at least a couple of times per week. So let's start off by doing our good old top-down analysis by starting off of the 4-hour. And here I am on the Euro futures chart. So as we can see, we consolidated for pretty much this whole week. We pushed down, we created this large lower wick. So this is the last 4-hour close. And then if we drop down to the 1 hour, we can see that these moving averages, which I only use as a cherry on top, I don't base my whole analysis off of them, but if we're using them dynamically, we can see the cross and that the price action is now consolidating and retesting the faster EMA that I have set to a 13. I believe 13 or 14. I think it's 13. Yeah, it is 13. Okay. So all this really represents is that you have a mean reversion. It's nothing fancy. All it really implies is that the price was quite aggressive into one direction. So we had this large bearish impulsive wave, and now you're going through a corrective phase. And so this is where now that we have our bias and overall context here, where we're looking into the downside, we see that the market structure is correcting. We're looking for our key zone. And so that key zone that I've marked out is this resistance zone or this cluster block that's around 1.177 even, give or take. So basically what I'm waiting for on the 5-minute, right? Because we've been consolidating like crazy. I'm waiting for price to break out of this range. This is what I typically look for, because whenever you have a range on a lower time frame and you don't see significant displacement, meaning 5-minute, 15-minute, 1 hour, we don't see that strong bearish move that's changing the lower time frames market structure, I typically wait, because that means that we still have yet to tap into a deeper liquidity pool. And this is also where you're probably going to see liquidity grabs, right? So right now, if we take a look at these previous peaks off of the 5-minute chart, we can see that, the price is probably going to sweep these levels sometimes within the next hour or two. So that's where this level is marked out and lines up structurally with these previous zones or levels that have also been rejected around this price point. I think a pullback towards the Tokyo Open or the Asian Open, so this is from yesterday, right? Again, that's slightly above 1.77, so it's about 2 ticks higher, but that's fine. I'm pretty much waiting for 1.77 even, or for at least a sweep of these highs, but I think we could push into that. And then if I get a strong rejection, this is where I would be looking to go short. Okay, now my stop loss, I would, in this case, if we go back to the 1 hour, I would give myself a little bit of space, right? So I'm probably going to have it set. I usually do about 15 to 20 ticks. So in this case, I'm going to do about 20, which means that if this moving average flattens out and this one comes down, let's say hypothetically the price pushes higher, spikes into this upper one, and then drops down, especially if this occurs later today during the Asian session or perhaps London session, that's fine, right? Ideally, I would like to take this setup after the open, because right now, this probably is not the greatest time, right? So unless this happens, honestly, within the next like 30, 40 minutes, I'm probably going to wait until after the open to take this short. And then my take profit target, if we go onto the 4-hour chart, I would have one halfway down this wick over here. It's probably going to give me about a 1 to 3, somewhere between a 1 to 2.5 to 1 to 3 RR, which for me is more than enough. Basically, what that implies is that on the 15-minute, it's roughly a double bottom if that hypothetically were to happen, right? Because there's no guarantee that we're going to take out this low and continue pushing lower. The price can push down into here, create an equal low or perhaps a higher low, and then we're off to the races pushing into the upside. So I don't like risking that, which is why I typically take a partial off, especially when I see these large wicks. I take him off at the next structural zone, just in case this continues to range. And if not, my second RR, I usually give a little bit of room, right? Because if we're going to push below this level, we might as well take out this low. At that point, I would be eyeing this wick here to the left. So this wick from Friday, 6 a.m. On the 26th. That's so weird. I don't know why this is glitching, but that would give about a 1 to 5 RR. And this is a quick follow-up to yesterday's setup that I was looking at. So initially the price was consolidating following the close, and I decided to do a quick short just to see if this would work out. But once we continued consolidating, I was pretty much basing my setup off of the fact that we swept these two previous highs as mentioned. So we rejected this. I figured, you know what, might as well take the setup and see if we end up pushing lower, but we didn't, so I ended up exiting that. And then once we pushed down and we took out this low that formed at 9:15 Eastern Standard Time around 1.17630, and then once I saw this large bullish 15-minute candle, that's where I told myself, okay, since I'm up, so I figured I would take this before today's news release. Right, so this is what the setup is looking like now. The news is about to release, and then the remainder I will hold on to it. So this is an example of a bias flip where you are looking for something to play out in the price, but then once there's a lot of consolidation, right, and the market structure changes, that's where you look to exit a trade. So in this case, I'm going to close out of one position, and I do have this sell stop set here just in case the price were to spike down. I'm protected essentially above break even. But there we go. We sold one position. My first RR was roughly like a 1 to 2.5. So far, things are pretty bullish. If we take a look at the dollar index, things are quite bearish, and again, this structural reversal is the reason why my bias flipped, at least temporarily, right? If the dollar creates a higher low, so right now, again, we were looking for the price to push much higher, but we did create this spike yesterday morning. And so if this turns out to be a higher low or starts forming its next bullish impulsive wave, that's how you know, or in my case, I'll know that I should probably get out of this setup here, right? So we do have these equal highs over here as far as right now, right? If we push up one more time, then that could potentially be another take profit target. Okay, but we'll just play it based on what the structure is doing. So yeah, drop a like if you enjoyed the video, subscribe if you're new, and let me know down below if you guys want to see more price action setups like these.